Hello and welcome. You're watching Your Trades on ET Now with me, Snehisha. With me is Priyanka. Priyanka, welcome back to the show. We missed you over the week. And markets did a lot while you were away from the show. And even if you talk about today's trading session, quite the dip, but we managed to recover quite smartly.
That's what the mature reaction that you saw, not just from the broader market yesterday, but just look at the Nifty. The way Nifty, in fact, opened at the lowest point of the day, but now since then it has been scaling high and we've closed in green. However, Bank Nifty, if you see, there has ever since the budget has been announced, there has been a cut of around about 2,000 points. We are still hovering near those levels wherein we opened. That means still 400 points low. It's closed with the around about a 400 points cut. Major culprits on the banking space: Axis Bank, weak numbers, though there were brokerage reports on Axis Bank, but then the damage which is coming in from the large cap banks, which has names like Axis Bank, ICICI Bank, though HDFC Bank has holded its ground. It's closed with a strength and in fact more than 0.5% up. VIX has spiked today, Snehi, more than 7%, which do indicates that a kind of volatility which is in on the either side, and that's how we saw that the dips or maybe the levels wherein the traders, the bulls came in, and that's how the Nifty got lifted up also. The leading spaces today which bucked the trend were auto and pharma. In auto names, you talk about the top 5 gaining stocks on the Nifty. The top stock was Tata Motors. Another kind of other stocks coming in from the oil and gas pack. In fact, Oil India from the mid-cap pack also was a top gainer, and ONGC on the Nifty. And of course, falling crude prices is one reason, and of course, let's not forget that the big $100 billion opportunity, which even before the budget was earmarked, and that's what streets started reacting on these stocks since then. The other set of stocks which are the gaining side were SBI Life, BPCL, L&T post the numbers, and Sun Pharma. In fact, there was an upgrade by Nomura on Tata Motors, and that's what the street has actually reacted. But the losers were clearly Snehi, Axis Bank, ICICI Bank, and yes, the way HDFC hold it to its ground. Let's see if are we in for a recovery trade, a recovery play in banks also. What did you
Absolutely.
track?
Priyanka, very well put together. But the one space that I couldn't take my eyes away from today was the entire liquor stock space, because there was an announcement on the Andhra Pradesh liquor policy wherein they said that they're going to be stepping away from local manufacturers and buying from the more established, the more organized players in the field. You had names like Radico Khaitan that surged up as much as 12%. We also interacted with the management of Radico Khaitan today. So, Radico Khaitan, you had Globus Spirits, United Breweries, United Spirits. All of these stocks continue to be in focus as well. So good moves coming in on all of those liquor stocks. United Spirits is one that has actually managed to hold on to the gains that came over the course of the day. It sustained at those 4.5% uptick levels. So very good moves coming in on United Spirits as well. Moving on, let's also talk about some other stocks that did see some kind of pressure. Priyanka mentioned Nifty Bank. Axis Bank was one stock that was largely under pressure on the back of a weak set of Q1 numbers coming in. Asset quality was the one that was biting away at the results this time around. Moving on to some weather updates, then it's been raining and pouring in Mumbai. If you've been inside your homes, you're lucky enough. But well, if you've been outside, you will realize that it's been a very bad day of rains coming in. It's the second wettest July in a lot of years coming in for Mumbai also this time around. And this having said, when you have 5 days still left of July, they've already declared it the second worst or the second wettest July.
Lastly, in fact, there's a red alert till Friday morning 8:30.
Absolutely. So tomorrow morning, red alert over here coming in for Mumbai. You have different parts of Maharashtra also with different types of alerts, but mostly a red alert coming in all across Maharashtra as well. But lastly, we'll also be keeping an eye out on numbers expected tomorrow, the likes of Cipla, IndusInd and Shriram Finance. Lots to do and lots to talk about tomorrow. But as of now, let's just keep it to today's trading session and bring on board our technical in-house expert. We have Kunal Botra joining us on the show to make sense of the kind of numbers, in fact, the kind of moves that we've seen today on the market and VIX also. So Kunal, very GIFT Nifty indicated a very subdued start, and that's what we saw. But somehow, by some miracle, we've managed to close above 24,400. Do you think that sudden knee-jerk reaction around the budget has now been digested? Do you see the Nifty recovering, or do you think this correction is about to last?
I think it was a fantastic day for the markets, because even though the Nifty was down, Bank Nifty was down 500 points, the kind of handover which we had got from the global cues. US markets down 1.5 to 2.5% on an average. You've seen the European markets, the Asian markets are also negative. So I think in that context, we did fairly well. And I think the major part of the market mood was more buoyant because of the way mid caps and small caps managed to see a small pick up for themselves. So many of the mid cap stocks, small cap stocks, they've managed to follow themselves up over the last couple of days, and I think that generally is an indication that maybe the markets have digested out the event of the budget. The volatility is out. India VIX has fallen from 16 levels and is now trying to settle into that range of 12, 12.5. So I believe that that's also a positive adjustment, that if we don't see a further rise in the India VIX, we would eventually see the market settling into a range for itself. The concern now emerges that if the global markets continue to see a broader sell-off, then sooner or later our markets will also start to participate on the downside. So I think now what we typically will follow through is what happens across the globe. If there is a further sell-off across the globe, then I think sooner or later our markets will also get back into that line.
Right. In that case, Kunal, what are the trades that you would recommend to our viewers?
So I'll recommend a couple of contra trades. The first one is Ramco Cement, a stock which is trading at a multi-week low for itself. Today, for the first time, I think after weeks of downtrend, the stock is showing signs of a bullish engulfing pattern as well as a bounce from its 50-day moving average. So would suggest a buy with a target of 850, stop loss at 778. And MCX is the other stock which has been an underperforming name, but seems like the stock is forming an inverted head and shoulder pattern above the 4,100 mark, would suggest a buy. Now positioning targets of 4,400, stop loss at 4,000 levels.
Alright, Kunal, thanks for sharing your picks and your views with us. On that note, we'll let you go. So Ramco Cement and MCX are the two stocks on Kunal's radar today. But let's keep it going with word coming in from experts, and let's bring to you the word from the wise today, and that happens to be N. Jaikumar, the MD at Prime Securities. He is bullish on the pharma sector as the balance sheets are now deleveraging. This is the view he holds. Let's go across and listen in why he likes this sector.
The pharma basket has a 6% weight on the index, and you look at balance sheets, completely deleveraged. You look at opportunities. Quarter on quarter, the US publishes numbers on shortages. It's happening to Europe. So if there's shortages in different parts of the world, there's pricing pressures that have abated, and Indian balance sheets are strong. Companies have started, announcing buybacks and measures that can bring investors in, and most important, index weightages are low, which means these are under-owned spaces. So pharma is I'm a big believer in pharma.
All right, that's the way you coming in from N. Jaikumar, who's very bullish on the pharma space. But then now time for network exclusive, the big network exclusive, in fact. FM, Nirmala Sitharaman, in her first TV interview right after the Union Budget, talks about the PSU space and also disinvestment. Here, she is in conversation with Times Network's Navika Kumar. Let's listen.
Disinvestment is not a process which I've got a cabinet approval, so I want to sell this today, I will sell it. No, it requires a lot of preparatory work. Many of our PSUs are now being professionally run, and therefore their valuations are all going up. But I'll have to find my best time to disinvest them. And that best time depends on so many different factors. The company's own readiness to meet the challenges of a market are not simple tasks. They consume time. But we will honor the cabinet approval decisions.
All right, that's the exclusive word coming in from the finance minister to Times Now. But let's keep it going with all the key takeaways from the budget. The scrapping of the indexation on the real estate space will only impact those who buy property as investments. This is the word coming in from the finance secretary, TV Somnathan. He also explained the rationale behind why they did away with the complicated indexation process. Let's go across and listen in.
If you invest in real estate only for the sake of your own home, then you have a rollover provision which is there. You don't need to pay tax on your real estate gains. You can roll it over into another house. You can do it for values up to 10 crores. So if we are talking about individual middle class investors having a house, they don't even need to pay a tax when they sell their house, because there are rollover provisions through capital gains bonds. There are rollover provisions through buying another property. So that is not what we are talking about. We are talking about people who are looking at it as an investment. If you're looking at it as an investment, then what rate of return do you expect from real estate? I presume you are looking for something more than a fixed deposit. So if a fixed deposit is giving you 7 to 7.5%, I don't think you would buy a property for that rate of return. So you're looking at something which is substantially higher, which is 11%, 12%, 13, 14, 15, 20. Anything above approximately 10%, and if you take inflation at 4 to 5%, 12.5% is not higher than what you would get. But if you're assuming that property will grow at a very low rate, then perhaps the loss of indexation may result in a higher tax than in a 12.5% rate. But otherwise, 12.5% is far lower than 20%. Yes, there is no indexation, but it's 12.5% of a larger gain instead of 20% of a smaller gain. And we have a number of calculations. It's my rough calculation. If you have a rate of return above 10% and definitely above 11%, then you are better off with 12.5 on the nominal than on 20% on the real gain.
All right, that's the word coming in from Finance Sikhi. We'll stay for a short break here. More to come on the other side of the news. Don't go anywhere. Welcome back. You're watching Your Trades and all. Let's get you the big story of the day, and that happens to be the Nestle earnings only. Though there was a miss on the revenue pattern margin front, but then Vinny Motiwala is here to do the number crunching for us. Vinny, tell us.
So absolutely, it's a weak number that is reported by Nestle this time. When you look at it, the expectation was around a 8% growth that the street was expecting, and ET now was expecting around an 8% growth in terms of revenue. But now we're only seeing around a 3% growth that's coming for the revenue on a year-on-year basis. Margins have expanded marginally, a slight bit of an expansion there. 23.15% is what the margin is coming at versus last year 22.65. Profits only seeing a growth of around 7%. Now, key factor to watch out for is volume growth. The company said that, this time they've seen around a 1% volume growth. They said that almost 1/4 of the growth that they were seeing in domestic sales was volume-led. So domestic sales was a 4% growth, which means a volume growth indicated and inferred at comes in at around a 1% volume growth. Expectation was around a 4 to 5% volume growth. So a miss coming in on all fronts, whether you look at revenue, profit, margin or volume growth, we're seeing a miss coming in there. Now clearly this indication also comes in that, Nestle doesn't have too much of a rural exposure. So leaving aside the rural growth part, even seems like urban, maybe they're not seeing that much of a demand that one is watching out for. So yes, that's a key factor to watch out for going forward. Now other than that, the company also highlighted in terms of commodity pricing, the inflation that one has seen there in cocoa prices as well as coffee prices seems like that has continued, and they expect this maybe that will go on for some time as well in terms of the rally that we have seen in these prices. So yes, watching out for that. But nonetheless, in terms of milk prices as well as edible oil prices, they have remained stable. So key factors that are impacting the company overall in terms of it, is it weak consumption, high food inflation? This is impacting Nestle's numbers as well as firm commodity prices, obviously is a big concern for them there.
Alright, so Nestle was a stock to watch out for today, but let's shift focus from one nifty company to another. In fact, let's talk about the biggest nifty gainer today, and that is Tata Motors, accelerating away in today's trade, up 6%, in fact more than 6% gains coming in, and this is on the back of a note coming in from Nomura. They've gone ahead, upgraded the stock to a buy rating from a neutral, hiked the target price to 1,294 versus 1,141 earlier. They believe that JLR's execution can lead to significant upsides. The demerger that's just underway may unlock value for CVs as well, and they believe that the transition from premium to luxury will help JLR stay one level above the high competition segments. They say that the strategy is working well, and in their view, incentives for Land Rover have been well under control despite an increasing trend across the rest of the OEMs. So very bullish note coming in from Nomura on Tata Motors. Gone ahead and hiked the stance as well as target for that company.
All right, now, but let's listen in what Axis Bank management has to say. Axis reported its number, and let's listen into what Puneet Sharma, CFO of Axis Bank, and Amitabh Chaudhary, MD and CEO of Axis Bank, has spoken about in the con call about the deposit growth and LDR.
Given the increased regulatory focus on CD ratio as one of the multiple metrics to be tracked, deposit growth could be a key constraint to growth in advances in the short to medium term. The Q1 FY25 annualized net credit cost is not reflective of the credit cost we believe as a franchise we will run through the full year, because it's impacted by timing differences. Roughly 55% of the increase in net credit cost has happened because of lower recoveries and upgrades in the corporate loan portfolio. We are seeing increase in credit costs across the retail unsecured portfolios.
Obviously, RBI had reached out to various banks on their LDR strategy. We have gone and submitted our strategy to RBI, which they've accepted, and we are operating within the parameters of the strategy which we have outlined to the regulator.
Alright, well, all eyes will be on three nifty companies coming out with their results tomorrow, and the first one of them is Cipla that we're going to be talking about. Now, pharma major Cipla's Q1 earnings are expected tomorrow, and Shrishti is joining us with what the street is penciling in when it comes to this pharma major. Shrishti.
Well, we are expecting a good set from Cipla this time around because generally Q1 is a strong quarter for Cipla. Let's talk numbers then, and on the revenue figure, we are expecting a jump of 7% on a YOY basis, while the EBITDA is expected to show a growth of 9%. But the key to watch will be the margins indeed, and 24.1% is what we are expecting on that particular front. Onto the profit figure, we are expecting 1,071 crores, and onto the segmental performance and the geography-wise performance, India business is expected to show a growth of 7% on the YOY basis. When it comes to the US markets, there too we are expecting a steady growth, and this time the growth will be supported by the market share gain in some of their key products, as well as the scale up in already commercialized product is what we are expecting. Even the South Africa business is expected to show a growth of 7% on a YOY basis. So all in all, a good set expected from Cipla, but the key to watch will definitely be the management commentary on the US pricing, as well as the demand that the company is looking out for in some of their key regions, and the margins guidance indeed. And lastly, we'll also look at for the commentary on the site transfer of their key products is one of the other key monitorables. So all eyes on Cipla.
All eyes on Cipla, but then let's understand what is street expecting out of IndusInd Bank also. That is all set to report its number, an uptick in net interest income, profits is on the cards. My colleague Gaurav joins in with that what else the street is penciling in. Gaurav, over to you.
Well, yes, when it comes to IndusInd Bank, now street is not expecting any kind of negative surprise in terms of numbers, but asset quality is a concern in this bank as well. So first let's look at the numbers. Now they are expecting net interest income to increase almost by 14% on a YOY basis. We may see PAT increasing almost by 9%, while PPOP growth can be at 8% on the back of the lower cost to income ratios and higher fees. But apart from that, when we talk about provisions, they are expecting an inch up in provisions in this quarter, and the reason being that the MFI exposure for the bank is higher than the peers, and that is why they are being a little pessimistic here. They think that there may be an uptick in credit cost or slippages, and that is the main concern around IndusInd Bank for Q1 FY25. Talking about advances and declines, deposits, we have already seen advances increasing almost by 15% on a YOY basis, which was a little lower than the guided range of 18 to 22%, while deposit growth was also a little lower than the guided range of 16 to 22%. But apart from that, when we talk about any other ratios, we have already seen that the term deposit, the increase in the term deposit rate for the bank is higher for the last 2 quarters, and that is the reason why we may see net interest margin moderating a little to 4.25% for the bank, and that may moderate almost by 5 basis points on a quarter-on-quarter basis. Lastly, we will be watching out on any kind of commentary on the growth, any kind of commentary on the deposit mobilization and credit cost. Let's not forget that the bank has utilized their contingent provisions for the last 2 quarters, and that is why we saw a negative sentiment coming up in the stock price. So on back of this, we will be watching out on any comment on the contingent provisions as well. So all in all, healthy numbers are expected from IndusInd Bank, but asset quality still remains a concern for the bank.
Alright, so all eyes will be on IndusInd Bank as well, but another nifty company, Shriram Finance, also set to come out with its Q1 numbers tomorrow. Largely a healthy set of numbers expected from this company as well, the newest addition to the Nifty 50 pack. Now let's take a look at what these numbers could look like. Interest income is seen at 9,513 crores, an uptick of 20-odd%. Net interest income is also expected to grow by 28% at 5,385 crores versus 4,200 crores this time last year. The PPOP, which is the operating profit, is seen to grow by 27%. PAT is also being penciled in at 2,021 crore rupees versus 1,675 crores, which is up almost 21% on a year-on-year basis. Now, when you take a look at sequential growth that's expected on some metrics, NIMs are seen largely stable at their 10.6, 10.7 mark, slightly pressured but not much to worry about on the NIMs front as well. ROA being seen at 3.29 versus 3.21, so rather flat. On the flip side, ROE is being seen at 16.7 versus 15.9, so slight expansion on that front. And provisions are also seen down 8.2% on a sequential basis, so that's yet another positive coming in. Now, key expectations from the numbers this time: disbursements are being penciled in at 36,500 crores. Credit costs likely to remain stable at 2.3%. AUM advances to grow between 19 and 20%. And lastly, very quickly, what factors will be important to watch out for? Any commentary on cross-selling, strategy regarding loan products other than vehicle loans, growth in the CV and retail, as well as asset quality for the two-wheeler and personal loan segments will be very important metrics to watch out for tomorrow.
All right, so all eyes on Zipline, Listen Bank and Shriram Finance. But then on this note, that's a wrap on this edition of Your Trades. Thank you so much for watching. Stay tuned to ET Now for more news and updates.